What role do your business credit scores have to do with like getting business loans, business credit lines, business credit cards? That's exactly what we're going to talk about today. Look, you probably underestimate the dramatic impact that business credit and business credit quality has on your ability to be able to fund your business. And so during this training, I just want to map this out. I want to talk about the 5 things or so that business credit scores are responsibly for directly when it comes to your ability to get money. Okay, are you getting the money that you want? Are you getting the terms that you want? Are you getting the approvals that you want to get? We're going to dive into all of this. And by the end of this, you're going to know the actual impact that business credit has on your ability to get the money that you want and need to be able to fund your business. We got a lot to cover, so let's dive in. So first of all, here's the deal. Business credit scores aren't as well known as consumer credit for 2 main reasons. First of all, when you go to Target and you try to check out and buy something, they're always offering you, especially if there's any value to what you're buying, their Target credit card and get 20% off of your purchase. So we're just exposed to consumer credit all the time, whereas business credit cards are kind of hidden. You don't hear about them a lot unless you hear it from someone like me. Like you're not going to Home Depot and them say, hey, do you know about our commercial credit card that doesn't require a personal guarantee and credit check? And the reason for that is the credit issuer kind of banks on the fact that you may be ignorant, that you might not have that knowledge that they don't want you to have, so they can get you the personal guarantee and the credit card that actually pays them more money, right? And then they know the more well-established businesses have this insight of business credit and are able to get what they actually need. But the other thing is that when it comes to business credit reports and scores, there is no law that governs this. See, in the consumer credit world, there's a law called the Fair Credit Reporting Act, and it requires that if somebody denies you for credit, then you have to be told in writing why they denied you, which bureau they pulled, and what they didn't like on that bureau. So if I get denied a credit card and they say, you'll hear by mail in 7 to 10 days, that letter I get in the mail says, hey, I pulled your Experian credit report. We didn't like these things. That's why we denied you. That law doesn't apply to business. So what happens in our world is that we are getting denied a lot of financing due to business credit, and we don't even know it, because the lender's not required by law to tell us that's the reason that we're getting denied. We pay higher interest rates. We pay worse terms. All these bad things happen to us and our ability to get money, and we don't even understand. We don't even tie it back to the fact that it's business credit quality when it oftentimes is. So what are the main roles here of business credit reports and scores when it comes to your ability to get money? Well, first, let me say, if you're just coming in, give me a shout out. Give me your company name, and I'm going to give you a shout out on the stream, just like Ivan did and Eugene. Eugene says, I have now my LLC and don't know what to do with my credit score, 565. I want to fix to 100 and credit score business 850. Well, consumer credit, there's a lot of great companies out there, Eugene, that can help you on fixing the consumer credit and business credit. There's a great guide we have I'm going to throw up for you right now. This maps out the exact steps for you to be able to build business credit. You can go to creditsuite.com/EIN or just scan the QR code. And that's kind of like your Bible. It's been downloaded a million times plus, and it maps out the exact steps to get you to the phenomenal 100 credit score that you're looking for on the business site. So hopefully that helps you get to where you want to be on the consumer and the commercial credit. Marie is coming in, Notaries by Marie, and Troy is the king of women enterprises. I love that. Thank you all for coming in. So what are the main role of business credit scores and business credit profiles? Number one, loan approval or denial. It just comes down to that. So if you think about it, if you're applying for a mortgage, a credit card, or if you're applying just for a regular loan as a consumer, a car loan even, your consumer credit is essential to you getting approved. Business credit is equally as important for your business's ability to get money as consumer credit is for you as a consumer to get money. So if you're getting denied financing, there's a really good probability that the quality of your business credit had something to do with it. Now, the easiest way to know is to just ask the lender. If you get denied and you clearly don't know why, or the reason they're giving you seems fishy, then you want to ask them, hey, why did I get denied? What were the exact reasons that I was denied for? So for example, I got denied for an insurance policy for a watch I bought. This is weird. I've never had a claim again for jewelry in my life. So I pushed my way to the underwriter and said, hey, why did I get denied? She said, well, we pulled your LexisNexis insurance report and there were some things that we didn't like. So what you should do is get that report, fix those things, and reapply. So this is interesting because we have an underwriter that told me why I was denied when the person that I was talking to, the front end rep, didn't know. Then the underwriter actually gave me an action plan to fix it, turn around the denial, and get an approval. That is what happens when you actually push your way through and find out, why did I get turned down? And sometimes the front end rep you're talking to doesn't know. Sometimes you got to get to an underwriter to figure that out. But if you don't know, you want to ask. Now, I have a stack of denials that people send me for equipment financing, term loans, SBA loans, revenue lending, where the reason was stated that their business credit quality is bad. I have people call us in a panic. A lot of people hire us for that reason. A lot of my friends have this problem and call in a panic. So sometimes they tell you it's your business credit quality. Sometimes they don't. But if they don't tell you the reason, you don't know the reason, you want to press and ask. And what you'll oftentimes find is that business credit quality, scores, and profile is directly linked to your ability to get approved or denied. So just by building your business credit, you give yourself an exponentially higher probability of getting approved. Bottom line, if you don't want to get denied, build business credit. Show lenders that your business has a history of paying your bills on time. So if we look at what Eugene says, Eugene, I love this question that Eugene posted, because Eugene says, hey, I've got damaged consumer credit, want to fix it, want to build business credit. So in a case like this is very common for us as entrepreneurs. We're risk takers. We're rebels, right? So the result of that is when we're first building our business, it's pretty common for us to have damaged and beat up credit. The problem is now we're trying to get credit cards, loans, and credit lines for our business, and we have a history on the consumer side of maybe questionably history of paying our bills on time or not, right? So the problem there is that lenders look at our questionable history of paying our consumer bills. They automatically assume our business won't be able to pay its bills, and they deny us. Now, the easiest way to get past this is by building a credit profile and score for your business. Because when you do this, now you can go to the lender and go, look, I've had some problems on the personal side. I've had some struggles, but my business has always paid its bills as agreed. And when the lender sees the business credit report with a lot of accounts and paying its bills on time or early, then it understands that the business has a good history of paying its bills, and your probability exponentially increases of getting approved. So number one impact that business credit has on your ability to get financing is your ability to get denied or approved. And now you know how to dig in a little to figure out the reason for denial and the reason you want to build that credit profile to show a history of your business paying its bills, to overcome damaged consumer credit, to overcome other factors that might be against you, not for you, like time in business, industry, things like that, and to give yourself a real strength to be able to hang your hat on to be able to get financing. Now that brings me to number two. Interest rates, the actual interest that you pay. Now, there's a couple different ways we can look at this. First of all, business credit quality determines the type of product that you'll even get approved for. So I was just talking to our head underwriter today here at Credit Suite, and I had sent over a buddy of mine, $8 million company, to get financing. And I said, which kind of financing is he going for? Because one has 30% interest rates and the other has 7%, right? I need to make sure he's going down the road of 7, not down the road of 30% interest. And this is a really big difference for you as well. So what I mean by this is that you are going to get in the wrong product if you don't have business credit that pays sometimes a 5 times or charges a 5 times higher interest rate than one that doesn't. So business credit reports and scores directly affect your ability to get the right product. We want term loans. We want SBA loans. We want long-term loans and low-interest loans. Those give us small payments. Why does that matter? I'll give you direct numbers here. First loan we ever got at Credit Suite was $75,000. Keep track of this. It's a really big deal. $75,000, and our payment was $9,000 a month. Now, the reason the payment was so high is because the term was so short. The next loan we got was an SBA loan. We got it for $325,000. If you're following the math here, the second loan was for $250,000 more than the first loan. And our payment was about $4,600 a month. So think about that. Our payment to borrow $75,000 was $9,000 a month. Our payment on $325,000, $250,000 more was $4,600, almost half as much. We got $250,000 more in money for half of the payment. Why? Two things. Term, how long is the loan? Second, how much is the interest? When we got into a long-term low interest loan, we got a lot more money for half the payment. But we went into a short-term loan with high rates. Well, that could be the death of you because that's what gets you very, very, very high payments. That's why this matters. So business credit quality controls the type of product we want to get into. We want to go to term loans. We want to go to SBA loans. We want to stay away from cash advances, revenue lending, that kind of money that's short-term, very expensive. Now, the second thing is how you pay your bills determines your interest rate from that lender. So if I go to get an SBA loan, I might get a 7% interest rate. I might get a 10% interest rate. The difference there is directly related in many cases to our business credit scores. Our business credit scores represent how we pay our bills. If we pay our bills on time or early, we have good scores, we get low interest rates. If we pay our bills late, they call it DBT or days beyond terms, 1 day, 5 days, 10 days, 20 days, then the problem is we pay higher interest rates on that money. So the bottom line is that business credit has a role of determining the type of loan product we get. We want long-term low interest rate, and it also determines the interest rate we're actually going to get on that loan or credit line that we qualify for. So now you're starting to get the importance of building business credit. It determines if we get approved or denied. It determines the type of loan product and term that we get. It determines the interest rate, even the length of the loan itself. GDTV is in the house. Thank you for coming in and saying hey. And Ivan says, I'm lawn, landscapes, and more in Orlando, Florida. Hey, man, you're my neighbor. I'm right there downtown Tampa. Still working on us two brothers, mostly doing tree removal and a few commercial accounts with business taxes done for 3 years. Need to learn more about DNB ESTA. All right. Well, don't forget, everybody, if you're just coming in, scan this QR code right here and grab this business credit building guide and maps it out for you step by step. It's been downloaded over 1 million times. So I feel safe to say it's the most popular business credit guide of all time that maps out the exact steps for you all to be able to get the credit that you're looking to get. So the third factor, that role that business credit profiles and scores plays into your ability to get money is the actual amounts that you get approved for. Look, your business credit, the more you build your business credit, the higher the recommended amount from the credit bureaus. DNB, Equifax, Experian all have a little box on top of their credit reports that says the amount of money that they recommend the lender or credit issuer give you. So the higher that amount, the higher your approvals will be, the higher your credit lines, the higher your credit cards, the higher your loan amounts will be. So if you've ever applied for money and not gotten the money you wanted, the money you needed, the money you felt you deserved to have, more than likely your business credit profiles and scores had an impact on that decision. So the better your business credit scores, the lower your interest rate, the longer your term, the more money you are actually lent. So keep this in mind. Lender pulls your business credit report. The bureau says this is how much money we recommend this person be lent. They look at that and they really, really, really tie that into their decision of how much money they're going to give you. So now if you tie these three together so far, business credit determines your ability to get approved or denied. It determines the type of product you're going to go into. We want long-term low interest. It determines the interest rates you're actually going to pay. And it's also tying into the loan amount, the amount of money you're actually going to get lent. So if we want more approvals at better terms and higher approval amounts, business credit is directly related to all of those things. Now, it also opens up the door for us to get into alternative financing products as well, and it's necessary to get the best kind of loans that exist. The best kind of loan that exists for us is an SBA loan. Why? SBA guarantees that if you default, they'll pay the lender a large part of whatever you default. And so the result of that is the risk to the lender is lower, and they give us longer terms, lower interest rates, and more money. The combination we want, right? We want more money, 325, 350,000. We want low interest rates, 7-8%. Not as low as it was years ago, 4 or 5%, because the prime rate's gone up, but still low interest rates in comparison. We want long terms, 20, 30-year loans. Those are SBA loans, but here's the deal. You have to have business credit to get the vast majority of SBA loans because SBA uses a score called FICO SBSS. This is a small business score from FICO. and they require a 140 to 160 score range to approve you for an SBA loan. It's SBA's requirement. The way FICO SBS works, it weighs business credit history heavier than consumer credit history. So what this means is it is 100% impossible to have a 140 or 160 FICO SBSS if we have no business credit. It mathematically is impossible. If I have perfect consumer credit scores, 850 across the board, and no business credit, I will not have a score high enough to get an SBA loan. I just won't. So you've got to build business credit to get the best kind of loans that exist, period. You can't get them if you don't have business credit. SBA will even tell you on their website when you say, hey, what are you looking for in a loan? They'll even tell you, we're looking at consumer credit. We're looking at business credit. They'll even tell you right on their site that it is a requirement to even get approved for them. Now, if we take the best loans out of the mix, business credit is oftentimes a deciding factor for alternative lending, fintech, online loans, whatever you want to call them. Okay, I've got a stack of denials from On Deck, which is one of, if not the biggest online fintech lender that exists. And the reason for their denial is business credit quality. So these fintech lenders are really looking at how your business pays its bills. They're really looking more at common sense lending, where they actually want to lend you money based on what makes sense. Well, to them, even if your consumer credit's a little banged up, but your business credit's good, that makes sense for them to lend you money, because by lending you that money, they're actually lending you the money because they see your business pays its bills on time. So another reason that business credit has an important role in your ability to get money, it is necessary for the best kind of loans that are out there like SBA, and it is also preferred by a lot of fintech online lenders. So just by having business credit, you're opening up the ability to get approved for more different types of financing. Now, the next role that business credit plays in your ability to get money doesn't really have to do with all your ability to get money. It has to do with suppliers as well. And it also has to do with vendors. It has to do with your ability to get the stuff you need to run your business. So, for example, we've got clients that have hundreds of thousands of dollars in credit lines, one single credit line at one different vendor they do business with because of their business credit quality. So, for example, one of our clients owns a construction company, right? And her construction company, she goes to the local company in her town that has lumber and all the Home Depot type fashion store in her town and got a $300,000 credit line. Now that $1,000 credit line pays for everything she needs to buy to run her construction company. Okay, so it actually pays for everything that she needs to buy to run that construction company because of one credit line. So by building business credit, now she's able to get these vendor credit lines to be able to get all the stuff that she actually needs to run her business. The same thing with trucking companies. By building business credit, transportation companies can go get individual gas cards for $30,000 to $100,000 limits. They can go to Exxon, they can go to BP, Chevron, Sunoco, anywhere that sells gas, and they have $30,000 to $100,000 credit line. So it pays for the biggest expense they actually have to run their business. Now, we've got another client that actually goes and gets contracts. She bids on contracts. And what she found is that when she built business credit, she starts getting approved for all the contracts she's bidding. Because what she didn't realize is the people issuing those contracts, those companies are pulling the business credit quality of the people that are actually applying to win those bids. So what they're doing is they're looking at her company. She doesn't have business credit. She gets some bids approved here and there. Then she builds business credit, and all of a sudden, all of her bids start to get approved because her business credit quality is above and beyond her competition. I'll be honest. Until she said this, I never even thought about that before. I never even realized that business credit quality directly tied into her ability to actually get these contracts. But it does in many industries because the government, as well as many other privately owned sectors, are actually looking at business credit to determine if they should issue the contract to you or not, to issue you the credit lines to buy their stuff. The same thing with suppliers even as well. So if you want better rates from suppliers and better rates on the stuff that you're paying for monthly, a large part that's based on business credit quality. So just by building business credit, it opens up the ability to get more contracts, to get more credit with vendors, to make it easier to do business with suppliers as well. And the last thing that I want to talk about, the role of business credit in your ability to get money, really comes down to credit worthiness. It's just the likelihood that you will pay that lender back. Look, lenders ask us for a lot of documentation. They ask a lot of questions, and it all comes down to one thing. There's only one thing they ever care, only one. Every single question they ask, every piece of documentation they have you supply, it's all being asked for and supplied for one and only one reason. They want to determine your ability to pay them back. It's all they care about. The credit scores they look at, the documentation that they get, the questions that they ask you, everything they're reviewing is to determine how likely are you to pay them back on time. That's what they're trying to figure it out. And the terms, the rates, the approval amounts, it all ties back to this one thing. Well, by building business credit, you are showing that you are credit worthy. You are showing that you have a history of paying your bills on it as agreed. You are showing that other credit issuers, other lenders are giving you credit lines. They're giving you business credit cards. They're giving you loans, and you're paying those back as agreed. And the more that happens, the more people give you credit. The more people give you loans. The more people give you lines. Then they report it. Then other lenders see that, and they see their high approvals, and they give you higher and higher and higher approvals. Look, this is the way consumer credit works as well. You're not going to go start building consumer credit with a McLaren auto loan. It doesn't work that way. You start with small credit cards or a co-sign loan. You pay it back. You get a car loan. You pay it back. You get a mortgage. You pay it back. And the more and more and more this happens, the more types of credit and financing you get, the higher the approval amounts. Now you go from a $20,000 car loan to 50, to 75, to 100. Business credit's exactly the same way. By building the business credit history, you show that the credit worthiness of your business is high. That means that the likelihood that you'll pay them back is very good. And the more comfortable they are with your ability to pay them back, then the more likely it is that you're going to get approved for more money and better terms. And what better way for them to know that than look at your history of who else has given you credit and how you've paid them. So just by building business credit, you establish this credit worthiness for your business that helps you overcome things like time in business, industry, credit issues, all these other things that may have gotten you denied before. These are the main roles that business credit plays in your ability to get money. It determines if you'll get approved or denied. It determines the actual interest rates that you'll pay. It determines the type of products you're going to get approved for. It determines the length of the financing you're going to get, which directly ties in to the payments that you're going to get. It determines the loan amounts that you're actually going to get, how high are the approvals on the approvals that you are getting. It determines if you're going to be able to get SBA loans at all, and opens up the door for all kinds of alternative fintech lenders at all. It helps you get contracts if you're bidding on contracts. It helps you get credit lines with all the vendors that you're buying your stuff from to do business. And it also establishes the credit worthiness of your business, making you better suited to get money. They start chasing you. You don't have to chase them because they're chasing you with pre-screened offers. We want to lend to you. We want to lend to you. We see your business credit history. We see other people are giving you money. You're paying your bills on time. We want to give you money. We want to give you money. And not only do they want to give you money, it puts you into a better status to actually compare and actually leverage one lender against the other to get even more approvals and better terms as well. So I'm going to throw this up one more time. If you haven't already, grab this guide. It maps out the exact steps for you to build business credit. It's 100% free. Okay, it's been downloaded over 1 million times. It's like the Bible for business credit building. So it will give you everything you need to successfully build business credit. And don't forget, if you're interested in talking more about your business credit quality, seeing your business credit reports, getting tips and tactics to improve your business credit, you can always schedule a 100% free finance assessment with our team. Heck, we'll even tell you the exact financing you can get right now. And you can scan this QR code or go to creditsuite.com/consult to grab that as well. Thanks for tuning in. If you got value from this training, make sure you like and subscribe. If you missed this training, go back to the channel you just came in on and you can watch it in its entirety. And I look forward to seeing you next time where we talk about more cool ways